Benjamin Mushatama and Palisatawo on the move.
In 3 weeks' time, Kenya will host the 2024 Africa Shared Value and ESG Summit, which is a premier event aimed at advancing responsible business practices across the African continent. It aims to unify the principles of shared value and environmental, social, and governance or ESG frameworks. As we continue to build up to that event, today we're talking about the ESG First Fund, launched through a partnership between Aavishkaar Capital, a leading impact investment firm, and KfW, a German state-owned development bank. This $250 million fund is dedicated to investing in Africa and Asia with a clear mandate to generate significant ESG outcomes. The fund aims to offer not only superior financial returns, but also a positive social impact by aligning with global goals of sustainability, gender equality, and climate change. To chat a little bit about this as we build up to the 2024 Africa Shared Value and ESG Summit, we are joined by Darren Lobo, an Associate Director at Aavishkaar Capital, on the line. Darren, thank you for joining us.
Pleasure to join you all.
Tell us a little bit about the ESG First Fund that is supported by Aavishkaar Capital. Where did this idea originate from?
So the ESG First Fund essentially is looking at businesses that have an intentionality to improve their ESG practices. And it stems from regulations that's coming out in Europe that mandates all suppliers that are supplying to European businesses to be compliant with ESG practices, primarily focused around safe working conditions, fair trade, and so on, right? Consumers in Europe and consumers also in Africa want to buy products that are sustainably produced and responsibly produced, right? No one wants to buy coffee that's damaging forests. No one wants to buy apparel or jeans and t-shirts that's made in sweat factories where women were stitching up these apparel have unsafe working conditions, are forced to work for long hours and so on, right? So the ESG First Fund is primarily looking at supporting businesses that have an intentionality to improve their practices, both on the environmental side as well as the social side, which is employees and so on.
The idea of ESG is pretty fresh. It's pretty in its early development stages. So what criteria does the ESG First Fund use to assess potential investments?
Yeah. So for us, the most important piece is the intentionality of the founders or the management. Is the management team really keen on improving their practices? And the way we look at it is, if you indulge in, policies that are not supportive to workers are burdened with long hours and so on, that in effect relates to unhappiness at the workplace, which reduces output, which reduces profitability, and so on. So for us, the way we pitch ESG to founders is that ESG is a value creation tool. You have the potential to actually increase business, reduce costs by actually investing in ESG systems, right? So while it's new, there has been a lot of work already being done I'm not calling it ESG, but there are systems that are in place to take care of the environment through local regulations, NEMA, and so forth. But there are also initiatives on the social side. There are social security requirements and so on, right? So there is some base that's already in place, and the ESG First Fund is looking at businesses that want to improve on that base and stand on that base and do more.
Darren, most of the time when you want to actually provide a fund like this, you don't just provide the fund and just give it to that particular business and walk away. You want to make sure that that is a fund that is used optimally and is actually utilized in a best investment in terms of in operations. How does the fund plan to measure the long-term social and environmental outcomes of its own investment?
Yeah, so we're very clear on tracking outcomes and impact. For instance, what we do at the outset itself is a kind of a projection on what kind of metrics we'd be tracking and how that projection would lead to better outcomes. We track these metrics based on the industry that we are working in. So, for instance, if you're working in the apparel industry, it's largely down to the workforce and waste production, because there's a lot of waste that's created when you're creating jeans and t-shirts for large consumer brands in Europe and in the US. So for us in that industry, we would be tracking, number of workers and waste generation, and waste generation leading to waste recycling, right? So what we project is the workforce increasing, and then we'll also track things like retention and so on, because if you have improved employee policies, your retention rates would increase. You'd potentially be having better retention at your workplace. And similarly on the waste generation front, right? The improvement in recycling would increase if you've made better in investments in recycling technologies, or in ensuring that you're taking that waste to recyclers. Right. So for each industry, we would have different KPIs and outcomes that we would measure. And that starts from the day we invest, and we track it all the way till we hold the investment.
Speaking about industries, what sectors do you see as having the highest potential for growth under the ESG First Fund's investment strategy?
For us, this is largely agriculture. Agriculture that's producing things like coffee, tea, nuts, and so on. That's looking at exporting out of the continent as well. On the agricultural side, there's going to be impact both on the environment and social environment, because some of our agriculture is not sustainable. We don't use practices that are keeping the environment in mind. And on the environmental and on the social side, it's about worker rights, it's about farmer rights, and so on, right? So agriculture is a key core sector. On the other side, manufacturing as well, specifically manufacturing for apparels, which is a large sector and an upcoming industry across Africa, because Africa is scheduled to become one of the largest producers of apparel for the West. And in that sector, it's again down to the social side, because each factory is going to be potentially employing 5,000 to 10,000 workers, right? So those are key sectors. Logistics and warehousing is another potential area, and in logistics, we know the environmental impact of hauling goods across the world. I'd say agriculture, manufacturing, and logistics being priority sectors where the ESG footprint is really high.
Well, where do we actually find out more about this particular ESG First Fund? Maybe there's someone on the African continent saying, you know what, I'm an agriculture-focused business. I want to find out more about the ESG First Fund.
You can write to us. You can write to us. We have a website as well, where you can look up the criteria that we've mentioned on what businesses would qualify for financing and what would be the ESG requirements. We can share that with potential folks who are listening in, and then just write to us. Call us, write to us. We're happy to speak to you and share more information. Thank you so much. It's been a pleasure.
See you at the summit. That's Darren Lobo, Associate Director at the Aavishkaar Capital, speaking about their ESG First Fund.
Mark your calendar for October 24th and 25th. Join us in Nairobi, Kenya for the 2024 Africa Shared Value and ESG Summit, where we are turning vision into action for Africa's future at the luxurious Radisson Blu Upper Hill. This year's theme, Empowering Africa's Future, bringing together leaders, innovators, and change makers committed to sustainable development and responsible business practices. Don't miss this opportunity to contribute to Africa's sustainable growth. Visit AfricaSharedValueSummit.com to register and ensure your sport for an unforgettable 2-day experience.